Hey everybody, Smart Silver Stacker here. Hope you're all doing well. Today, it's my pleasure to welcome a special guest. I've got Lior Gantz. He's the CEO of Wealth Research Group, and he's here to give us some of his insight into the global economic system and what's going on in the markets these days. So thank you very much for joining me today, Lior.
Thank you for having me.
Absolutely. So I've been watching some of your insights on the interwebs here for months now, but it's exciting to get a chance to speak with you myself. I want to start things off today with a quote from Vladimir Lenin, of all people. Not that I'm a huge fan of him, but he once said, there are decades when nothing happens, and then there are weeks when decades happen. And it seems
Yeah.
to me like we're on the verge of some of the biggest changes to the world economy, probably that we've witnessed so far in our lifetimes. And not just the economy, but the whole global system as a whole. So I'd just like to get your take on that.
I think we're going through a process that is ending an 80-year cycle, or just a period, if you will, that entered a 30-year, that finished with a 30-year period that should have probably never happened. So coming out of World War II, we had two global superpowers, one in Europe, that was the Soviet Union, and obviously we had the United States, and they fought over hegemony. By the time the 70s rolled by, it looked like the Soviets were actually winning, but a number of key events that are far too lengthy to just speak them out right now turned the tables. And by the time the Iraq War happens, Desert Storm in early 1990s, the Soviets realized that militarily they're probably 15 years behind, and they saw it through the lens of the weapons they sold the Iraqis that just didn't work. And by 1991, 1992, the Soviet Union falls apart, and the United States becomes the global superpower, the only global superpower. And at that point, the structure that the Bretton Woods and Marshall Plan were put together in the middle of the 40s after the war was no longer needed for the United States. At that point, they had to configure and start to strategize about the next phase. But instead of moving away from that type of globalization, they hyperextended it. And countries that have nothing to offer to globalization entered that system. And for the past, and then for the next 20 years, that's mostly what we had. We had globalization without a real need for it, and it created enemies. There are many people in the West that didn't like the way that the United States was then bullying other countries, because as the only superpower, it didn't have anyone else to fight, and yet it did. And then what was missed is the rise of China. So by the time 2011 rolls by, after 20 years of this, now China is a real emerging threat, and the shift starts to happen away from the Middle East and into the South China Sea. And what happened with the Trump years and then the pandemic is that you had a real deconstruction of this hyper-globalization period between 1992 and 2020. And now we have finished that. We are no longer in hyper-globalization. We're now deglobalizing, and we don't know. We just don't know how the next phase looks. But we do know now that we are deglobalizing, and when you deglobalize, you create regions that have pockets of issues, because now there's not one system, but a multipolar system. So things that are status quo are now put into question. You have the dollar is put into question, the dollar standard itself. There are alternatives being floated around, very early stage, but just the idea of it shows you that we are deglobalizing and de-dollarizing. China as a modern day manufacturing hub is ending. They are entering a middle income trap, and they need to figure it out. They have a demographic problem that's acute. They need to see how they handle that. Obviously, another region is Russia and the Ukraine, and that whole scenario is basically a culmination of mismanaging the relationship with Russia for the last 30 years as the aggressor, and on the other side, not understanding the Russian mentality. And so we have war. War is basically a failure of diplomacy.
Mm-hmm.
And because the Americans are exiting the Middle East, they're creating this vacuum, and they're trying to figure out how this vacuum doesn't get filled immediately by Iran, China, and Russia. And they're trying to leave some sort of an order as they exit, or they can't exit, and now they have to be in both places, both the South China Sea and the Middle East. But what for sure is happening already is countries that up until now, for the past 50, 60, 70 years, have avoided militarizing because they had there were big parts of the Bretton Woods agreements, and they relied on the U.S. fleets, on U.S. aid, etc. They are now needing to stand on their own 2 feet. Germany in Europe is militarizing at the fastest pace in history, and Japan on the Asia Pacific is militarizing at the fastest pace that they've done in many, many years. And of course, the Chinese and the Americans are militarizing very fast. So what's interesting about this period is that we're writing history as we speak. We're not in a system. There's no system. There's a deconstruction of the existing system, and we still don't know how the next phase looks like. So I do think it's a very interesting period, as you alluded to, because we're literally we don't know. There's a lot of uncertainty out there, which is why interest rates are rising, which is why cash levels are rising. Everyone's trying to figure out how the world will look like in 3 to 5 years.
Mm-hmm. Yeah, it's probably a big part of why central banks around the world are loading up on hard assets like gold as well, all of the uncertainty out there. And yeah, it does seem like we are in a state of flux, and we're on the verge of some major changes. But like you say, I mean, hard to see through time to where we're headed. There was something you mentioned there I wanted to touch on, and that was how the Soviet Union was kind of brought to its knees by the U.S. through the 70s, and a big part of that, I believe, was the establishment of the petrodollar system. And the Soviets, they were big exporters of oil at that point, but we helped the Saudis develop their production capacity, brought down the price of crude oil, helped to bring the Soviet economy to its knees. And of course, it's part of a bigger picture. But now it looks like that whole system is likely on the verge of changing. It's something we've covered pretty extensively on this channel. And you mentioned the U.S. leaving the Middle East, and certainly other powers like the Chinese and the Russians do seem to be making significant inroads there. The Chinese with their Belt and Road initiatives, and in December we had Xi Jinping petitioning all of the Gulf countries to begin pricing their exports in yuan, their energy exports. What do you think about this New Deal that has been proposed? The Wall Street Journal covered it last week, between Israel, the U.S., and Saudi Arabia. It seems to be a kind of a Hail Mary last-ditch attempt to shore up the petrodollar system. The gist of it, I think, is that the Saudis get new ironclad security guarantees. They get new advanced weaponry from the U.S. They even get assistance with a civilian nuclear project. And in exchange, they will continue pricing their oil exports in the dollar. So what do you think about that deal? You think there's a possibility of that going through? And what do you think the consequences could be if it doesn't succeed?
Yeah, it does seem like an early stage negotiation with the Saudis. The Saudi Arabia is a country that has always had a foreign empire helping it out. It does have its own military, but they're not trained at fighting. They had the Brits and then the Americans always at their always got their back. And you know, in the last few years, they've seen that the Americans don't lift a finger as they did in the past to help them. You saw that when the Iranians attacked Saudi Arabia and nothing happened. And that's the reason that they're approaching the Saudis and trying to figure out what's next for them. And that's why Mohammed bin Salman, the heir to the throne, is calling this a multipolar world, which is a term that was used before World War One, when literally there were multiple European colonial empires like the French and the English, and then you had the Japanese and Asian, you had the Americans. You had multiple big countries that were all rich and all had powerful navies and militaries, etc. But we haven't been in a multipolar world in a very, very long time, over 100 years. So for him to call this a multipolar world is a big statement. I think that what the Americans and the Chinese and the Russians are trying to do in the Middle East is they're trying to figure out who can lead the Middle East. For the Chinese and the Russians, the obvious choice is Iran. But Iran is a very unique country because it's a UN member with a stated goal of annihilating another country. There is no other UN member that has a stated public mission to annihilate another country. But the Iranians are they've done very well in the last 30 years to further their agenda. If they weren't sanctioned, which is the real reason that central banks are buying so much gold, because America has really weaponized the dollar in the last couple of years. If they weren't sanctioned, they would have been a top 5, top 10 country. They're very, very rich in resources. So that's why they're sanctioned on them. Otherwise, they would really be a superpower. So with that in mind, China and Russia are really trying to create an Iran that's a superpower and help them. On the other side, the Americans are trying to contain that and trying to figure out who their horse in the game is. Is it Turkey? Is it Israel? It's harder for them to stomach. And so what they're trying to do is they're trying to leave some sort of an order that's not tense. That is the essence of the Abraham Accords that Trump put together, trying to create some sort of a relaxation for the time being until something emerges that's more orderly. But keep in mind that this region of the world has never had any lengthy period without wars, and any country that has survived it as a democracy for a very long time. So, it's looking very much like if the Iranians are going to reach some sort of a nuclear capability, the Saudis will ask for the same thing, and you'll have an arms race to go nuclear in the Middle East, which is not fun. So, as I said, because everything is moving, and because the Americans have a goal of trying to leave the Middle East in order to focus just on the South China Sea, it's an interesting time to see how every country is trying to leverage its strengths, lower its weaknesses to a degree where they can project power and not get engulfed by other countries. And of course, the mother of all problems is Africa, and how Africa is going to be ruled in the next 50 years, because Africa is the future. Demographically speaking, that's the future of the world. So the GDP growth, the wealth, all the progress and development, the next stage is the southern half of the hemisphere, where the demographics are extremely young, and all the development is ahead of them, whether we're talking about Latin America or the 54 countries of Africa. And you can already see how the both NATO and Russia are very active in Niger, for example. And this is gonna just the beginning. Like the struggle over Africa and Latin America is just starting.
And the way the world is breaking up into these multipolar blocks, as you say, it is concerning. Certainly, it to me it almost harkens back to George Orwell's 1984 a little bit. I don't know how familiar you are with that, but you got the world broken up into the three
Yeah.
major power blocks. You got like North America and Western Europe, the Russians, and then you got the East Asia, and they're in a constant state of warfare. And typically, the battlefield for those conflicts is places like Africa or South America in that book. But it almost seems like that was kind of prophetic of Orwell to see the world devolving into that kind of a scenario, because it really feels like we're on the verge of some kind of a major conflict. And seeing the world break up, as you say, into the multipolar order like we had maybe 100 years plus previously, and that was sort of the lead up to World War I. Do you
Mhm.
see this leading up to a major conflict? Do you think that these hotspots around the world, like the Middle East and the South China Sea, and we've already got hot war in Ukraine, but certainly that could spread to places like Poland or the Baltic states? Is that what you forecast?
Well, first of all, with regards to the U.S. policy in the Middle East, I put together an exclusive report for your audience so they can kind of understand it from um, certainly my point of view here in the Middle East, because I'm in the Middle East, but also so you can understand the bigger picture. If you go to wealthresearchgroup.com/USA, you can download that exclusive report, and that can kind of give you the bigger picture. And I've also put together another one about Mohammed bin Salman and everything that's going on with the Saudis. If you go to wealthresearchgroup.com/Saudi. So I think those are two great weekend reads that you can do. Each of them is like 6-7 minutes, and they're a culmination of hundreds of hours worth of research that we put together. So you can understand this further. But when you look at cycles of globalization and deglobalization, we've had these are cycles that are very lengthy, right? Periods that are very lengthy. The world is, for example, was in a globalization phase between 1870 and about 1910. And if you remember, and globalization isn't perfect or anything like that. Just like democracy isn't perfect, but it is clearly in globalization. Something that does happen is fewer regional wars, because there is some sort of a structure that deters wars. Now, we don't have to be naive here. For you to have that structure, there needs to be a superpower that threatens everybody, but that's how you keep the peace. So the criticism always about the United States is that, hey, they're involved in all these foreign wars, they're in all these countries, and it's true, but that's the modern phase of globalization. That's how it happens. You have the U.S. Navy, everybody's afraid of it, and that's why everybody's in line, and that's why you have a long peace in Europe for as long as we've had it, until the Russian invasion. So it's not perfect. And another thing that happens in globalization is, because of the arbitrages between countries, countries like the United States with a middle class that was earning an incredible living, abnormal living standards for entry-level jobs and middle-income jobs that usually do not support such a high standard of living. Companies tend to go elsewhere and find cheaper labor in order to lower salaries, and that's what we've seen with this period of globalization. So it's not like Americans love globalization. There's a huge section of society that hates it and hated it, and voted Trump into office because of that, because they don't like globalists, elites, and people that run the U.S. military and the deep state in that manner. In the 1870s, though, till the 1910s, in that globalization period, we've had the invention of electricity, of the car, airplanes, and we had a very high standard of living in the United States and elsewhere. But in 1910, we started deglobalization. And a couple of years later, we had the formation of a central bank in the United States, which was very un-American up until that point. Then World War One. Then you had a huge crisis in 1920 that's not really discussed or talked about in America. And actually, it changed the gold standard that was in place until then. And it started this period of the Roaring Twenties, which ended with the Great Depression and the rise of fascist powers in Germany, and then in Italy, and then ultimately World War II. So deglobalization between 1910 and 1945 happened to be way worse than, obviously, than the globalization before it. And then you had another session of globalization, which lasted between 1945 and 1992. And then in 1992, we started this phase of hyper globalization, which we're now, we've ended it. And so now we're in deglobalization. The last period wasn't fun. It was filled with wars. And we have to think, what will happen in this one. But it could very well be that you do have wars, big, regional wars, as countries try to shore up their weaknesses and fortify their topography and geography, because otherwise they lose out. It's just the way the world works, right? So I think that we will see plenty of problems in the years ahead, because all countries are now trying to figure out what our assets are and who do we align with. Do we align with the BRICS? Do we align with NATO? What is this world that we're going into? What do we have to offer to the world? Because as you can see, if globalization ends, if you're a country with cheap labor, it's not automatic that you're going to see a rise like China had. So because countries are bringing back manufacturing home, for example, so many countries are moving out of China and moving into Mexico, for example, which is a friendly border to the United States. It's non-threatening, all that kind of stuff. So we're seeing huge changes. And normally these sort of changes don't go without friction. So I tend to agree with you that we will see issues and problems and conflict and war in the years ahead in these regions that are trying to rearrange who is the dominant player in the region. And in other regions, you will see new alliances forming or strengthening alliances. But clearly, you can see two blocks here that are forming: the Western Bloc and the Eastern Bloc.
Yes, yeah, it seems like whatever you want to call them, the BRICS nations, the global South, and then on the other side of the coin, you kind of have the G7 and the traditional Western powers.
Sure.
Yeah, and the deglobalization leading to conflict. I mean, it's like the old saying, when goods don't cross borders, armies will. And I think we may have reached that point. Another effect of the deglobalization that I anticipate is it will contribute to higher levels of, I don't want to say inflation, because to me, really, inflation is the expansion of the money supply, but price inflation, we can call it, or, higher prices just from the breakdown of global supply chains, kind of like what we witnessed during 2020, but just, amplified is how I anticipate we'll see this going forward as the sanctions heat up and potentially even the onset of open kinetic warfare begins. I mean, that would be a tremendous impact, I think, on price levels for countless goods and services. And on that note, I want to kind of pick your brain about inflation and interest rates, because we're finding ourselves in this situation now in the US where inflation is remaining kind of stubbornly high. The latest CPI data from July showed that headline CPI had ticked up to 3.2% from 3% in June. The core CPI still remaining stubbornly high, 4.7%, well above the Fed's inflation target of 2%. And they're persisting in these rate hikes. And yet we're seeing all of this weakness in the US banking sector. We are seeing interest costs on US debt absolutely soaring. We know at the same time, the US has kind of staved off a recession, seemingly in large part by just committing to massive levels of deficit spending, and the US deficits are
Yeah.
ballooning. And it seems like this is unsustainable, this program of hiking rates while maintaining these incredibly high deficits on top of the already enormous debt, which now we're seeing as treasuries roll over. We're seeing that tick up constantly. And already, if you look at the chart, it's like going parabolic. So,
Yeah.
what is your take on the rising interest rates and inflation, and what's going on in the domestic economy here in the U.S.?
Yeah. For one, I think that inflation is going to stay with us for a few more years as um, as we move from a world where China supplied endless labor force and very high standards of supply chain logistics through the world. It basically was a manufacturing hub. But I know many people don't know this, but in 2011, their urbanization period peaked. And so the amount of labor that they have to offer the world has stopped growing, and it hasn't been growing for over 10 years, while their salaries have gone up about 20-fold since the early 2000s. So they're not cheap. There's about 50 countries that manufacture cheaper than China today. That's a quarter of the world. But of course, none of them have so many workers. So now you're running out of workers, you're running out of cheap workers, and China obviously has other agendas. So they're making it very hard for businesses to even operate within the country. So now you get to a point where what drove tamed inflation is gone. And so that's creating inflation, of course. And when you bring manufacturing back to the United States or to Mexico or other countries, essentially it's like think about surprising your your wife. You just buy your entire house, you buy furniture, beautiful furniture. She comes in, she hates it. She's like, throw it out, buy new. Now you paid like double for furniture. That's essentially what you've done, right? You build all this infrastructure in China, and now you have to build a new in other countries. So it's very inflationary. You need to train a lot of people. There's not the same amount of workers in the West as there is in the East, et cetera, et cetera. So that's one reason why we're seeing a lot of inflation, sticky inflation. Secondly, the labor participation in the West, because of mass retirement accelerated by the pandemic, which made a lot of people just say, you know what, I'm just quitting. I'm retiring. It's creating a labor shortage, a real labor shortage in many countries, especially in the United States. And so that's happening. And of course, higher interest rates deterring development of housing is causing rents to be very high. So with all of that, I don't think that's going to change. When you think about higher interest rates hurting economies, they hurt the United States, but they cripple other countries that have far lesser. The United States is an incredible economy. The world has never had an economy like the United States has. So other countries that have dollar debt and are seeing their interest rates rise, that's where the de-dollarization and talk about alternative currencies and that's why that is happening, because these other countries, they don't want interest rates to rise. They'd love it if they could have something else, but because their currencies are so bad that they have to transact in dollars because nobody trusts their currency, they're falling into this world of higher interest rates. But they wish they wouldn't. It's not automatic that all these countries love this new interest rate environment. So yes, the United States is hurting because of higher interest rates, but other governments and other countries hurt way more. So that's on that front. But yeah, for sure, the United States has unsustainable national debt and deficits, etc. At some point, the populace will care so much about it that it will become the main focal point of a presidency, and then they will actually tackle that in a big way. But until that happens, no politician is going to start cutting your entitlements or anything suicidal politically as that. But when that becomes something that people demand, it will happen. So it just depends on when the millennials will have enough voting power to tell the boomers that they need to start accepting cuts. So I don't think it's happening in 2024, but it's certainly going to happen. There will be a lot of public debate on the deficit and where it can be cut, or what can be cut, because you can't raise taxes without creating recessions. There's a lot of studies on what you can do with taxes and how that impacts, but you can't cut your expenses in some degree, or what the French did, which is lengthen the years of retirement and all that kind of stuff. So that's going to happen. So when you think about this entire structure, I think the United States is not a victim of deglobalization, not at all. In the last 10 years, the United States has realized that it's an oil and natural gas empire. Has further realized that makes them an exporter of energy. So they're very, the United States is hugely self-dependent if it wants to be energy-wise. That's one incredible asset. If we are moving into a deglobalized world, there's nothing anywhere in the world that's as efficient as the Mississippi River system for logistics and transportation. There, it's an incredible natural system. You've got incredible borders on each side of the Pacific and the Atlantic. No one is within range of you. That's of course very different than the Chinese, which have an island chain from Japan to Singapore with hundreds of thousands of U.S. troops and weapons pointing at them, and a lot of choke points in terms of marine choke points that you can you can close in terms of negotiation, and then China can't even get access to oil, natural gas, and commodities. There's nothing like that for the United States to worry about, and you have friendly neighbors both to the north and to the south. With the south having a lot of cheap labor, very an entrepreneurial country that wants to become a manufacturing hub, which is Mexico. So when you look at all of that, and then you look at the militarization of Japan and Germany and how much weapons are sold to them by the United States, I think that and the middle class obviously is anybody that wants a job has it, or can get one in the United States today. It's a very robust economy that's only going to grow bigger. I think that what people need to think about is the fact that this prosperity is aggravating other countries, and that's what the BRICS are really about. They are, hey, we're 43% of the world's population. Between us five, we're about a third of global GDP. We have no representation in the G7. Your SWIFT system can always sanction us. Your navies patrol the world freely, and we don't have that same thing. Like, why are you so special? If you're only, if you're less of the global population than we are, and I think that is not going away. So the United States will have to deal with the rise of these voices and these concerns, and that's, I think, where the world is developing into in terms of the issues that are at stake.
It's interesting you mentioned there that you believe we'll see some measure of austerity here in the U.S. as a response to rising deficits, and they won't be able to tax their way out of this. Now, I mean, I agree with that. I don't think there's any way you can uh, pay for the level of spending that we have through taxation, because, as you say, I mean, you diminish economic activity when you crank up taxes, you decline your revenues, et cetera. Um, However, I it's hard for me to envision a political situation in the U.S. just from what I see, in which austerity is like accepted by anybody. I mean, I kind of envision a future in which the powers that be here in the US just sort of double down, and then rather than pay for it through honest taxes, they just pay for it through the hidden tax of inflation, kind of along the lines of what Alan Greenspan told us back in congressional testimony, 20 some odd years ago, when he said we can guarantee benefits in any amount, but we can't guarantee their purchasing power. What do you think about that? Do you think that we will resolve our deficits with austerity, or do you think there's a possibility of massive inflation?
I don't think we're going to resolve the deficit, but we're going to put a program together where they're more sustainable.
Okay.
So uh, you're not going to solve $30 trillion. It's just not feasible.
Yeah, especially when you consider the unfunded liabilities,
Yeah,
$190 trillion dollars.
it's
I mean, there's
not a
not that much
solvable
wealth.
event.
Yeah.
It's not solvable. There needs to be an upeasing of the structure in which this gets paid back. The United States is the world's largest economy by a mile, and it's probably going to continue being the world's largest economy. And I think that it does need to figure out why its private sector is the global leader and its government is faltering in terms of managing the books by so much. So we'll see. As you know, the largest three expenses are Social Security, Medicare, Medicaid, which are 100% entitlement. So there could be a situation where you change the terms by which you're entitled to this. So you don't change the sums, but you change the terms. So you need to contribute in some way to society. And with aging becoming a real concern, because if you retire at 65 and now you get to live 20, 25 years, it's hard for governments to finance that type of length of living. When the ideas of pension were floated first by Bismarck and other European politicians 150 years ago, and they put them together, the average person lived until 53, and I think the retirement was at 56. So it was literally constructed to be something that is a political promise. But now it's the other way around. So yeah, look, France just showed you a case study of what can happen. It's a modern first world country, rule of law, everything you ever want to compare the United States to, and they've tackled it. So I think it's going to show up in other areas of the world as well. It might be tied to CBDCs in one way or another. I don't know if you've read my CBDC reports, but I've went A to Z. Like I've read everything from the IMF, World Bank, the Chinese government, etc. If you want to access that research, you can go to wealthresearchgroup.com/CBDC and CBDC2, like the number 2. And actually, we put up a fresh one, which is CBDC3, the number 3. If you read all three, I guarantee you will know more than 99% of the population about CBDCs. But one thing that could happen is that the central bank will pay directly the entitlements using CBDCs, and that way they'll enter circulation, or you'll have to pay your taxes with CBDCs, etc. And that's how you roll it out into society. And once you have like a new payment system, it can always be that something happens with some sort of a Jubilee, or other countries in the world that also have massive debts start to restructure against the United States. So it's not like the United States is the only country with debt or with high debt to GDP levels. Other countries would love to see some sort of a wipeout as well. It's not like a vacuum of just the United States is in this mess. And of course, the United States has a lot of means to pay it's dead. So in general, I think that this is a problem that will be addressed. I think if not in the 2024, then certainly in the 2028 elections, you'll have enough millennials in high-paying jobs because 2029 is the year at which millennials as a generation hit peak earning years, which means that they control the middle class. And at that point, they have a lot of political power. And something they'll want to talk about is how much the government is spending on their folks. So I think that it will be something that we tackle this decade for sure.
Yeah, well, we'll be forced to, I suppose, eventually. You can only ignore a problem like this for so long before it becomes completely unsustainable. And I will definitely check out those reports. I'll put a link down in the description for anybody who wants to check those out. I would encourage you to check out Lior's work on this subject. And Lior, before I let you go today, of course, I'm the Smart Silver Stacker. We talk a lot about precious metals on this channel. I would like to get your take just on the gold and silver markets in general at this point. It seems like they're kind of range bound at the moment. Gold, for example, we've surpassed the 2011 highs, but every time we come up against those nominal all-time highs over the past several years, we seem to get knocked back down just under $2,100 there. It can't seem to break through that resistance. Do you think that with everything going on in the world and the flight to gold potentially as a safe haven asset and continuing inflation, which, as you say, you see persisting for some time, do you think that we'll break through that resistance? Where do you see gold and silver going? If you have any price targets or anything like that you'd like to share, I would love to hear from you on that topic.
Right now, I think we are certainly in a correction period, and that's because interest rate forecasts have become more hawkish in recent months. From a market that priced in 5% as the top, now we're pricing 550. From a market that priced cuts as early as December, now we're pricing them in May 2024. So lengthening the period until rate cuts and raising the forecast on the terminal rates, or basically the rate at which the Fed says, "Hey, we're pausing," but they pause and decide to never raise rates from there. That has risen, and it made interest rates positive on a inflation adjusted basis, and that's very bad for gold. Gold flourishes on periods of declining real interest rates and certainly on negative interest rates, and we're not there right now. So every time we've seen one of these before, we saw one in 2007, we saw one in 2000, we saw one in 2015. Each time interest rates rose, and in 2018, September 2018. Anytime we saw those, gold bottomed afterwards. So the good news is that whenever this ends, it's a great time to buy because it's a bottom. The bad news is that we just don't know when the market will become convinced that that was the last rate hike and that a rate cut is very much priced in. I think that for the time being, the selling pressure on gold is immense. So if you're underinvested, it's a great time to buy more ounces for the same amount of money. If you're already invested, I think that just either you need to hold through the period. It's when you buy a commodity, you're at the mercy of the commodity. So I think that's where we are right now. We're in a pretty extensive correction cycle. It might take us under 1900, and it will start to bottom and end with like a big flush day, like when something macroeconomic says, hey, the Fed is probably going to get a lot more hawkish, and the market starts to over price hawkishness, and then it ends up not happening, and you have a nice bottoming effect. I remember in September 2018, this was the last time I made a big purchase of physical gold. It started dropping from March till September, and in September, for one day, it reached 1180. And I called the dealer and I said I'd like to buy gold eagles, and the price was 1200. And that was literally maybe a day or two after the bottom. So, just look for a strong flush day where the price drops by 30, 40 bucks, and that's very close to the bottom. And I think that we will see that soon. I don't see this lengthening till 2024 for two reasons. One, the Fed is fighting a very, very frozen housing sector that's actually recovering. So that's good news. And two, CPI is very encouraging. So we are in a situation where the Fed funds rate is much higher than the CPI print. And that is by definition very restrictive, and you don't need to be here for too long. So I think that that's happening. On the flip side, I don't think the Fed will do anything fancy on an election year. So I don't expect any drama from the Fed in the next year, because elections are just a year away.
All right, so that is a buy signal for everybody. When you see that big flush day, keep an eye out for a bottoming price in the gold market. Any thoughts on silver?
Likely the same. So, weakness, etc. I think that silver, much more than gold, is tied to the dollar. And as long as the dollar is now very strong in general, it's not good for silver. But on the flip side, once rates will start to get cut, my, silver can seriously start to rally towards the high 30s and into the 40s. It's a very interesting commodity in terms of its potential upside once we end this period of incredibly restrictive interest rates.
Yes, yeah. Once the Fed returns to the quantitative easing, the printing press, should that
I
come to
don't think it
pass?
will.
You don't think it will?
I don't think it will. Not for our generation. This is like inflation today is like 2008 for banks. Like the eyes of the public are on the Fed. Everybody thinks, hey, the Fed did this, so the Fed is not going to do QE. The Fed is not going to print. It needs to start cutting soon, but it will continue to sell its balance sheet off. I think that a marriage of starting to cut rates back down to normal, plus the $10 trillion that are currently in money market accounts and will come back to the banking system, and then from the banking system get lent out to the mortgage industry, that will continue to leave inflation with us for a long time and weaken the dollar, and couple that with more normalized interest rates. And I think that's what's going to eventually lead to the dollar bear market and a very robust market for silver, probably in the second half of 2024. But once it starts, it's a multi-year event.
Got it. So rate cuts, but no QE. That's an interesting forecast. Well, time will tell. I think that certainly some form of easing in terms of whether it just be rate cuts or, maybe the purchasing of more treasuries. But according to Lior Gantz, no more QE in the future. That's very interesting to hear.
Yeah.
All right, Lior. Well, thanks a lot for joining me today. It was an interesting conversation. We'll have to have you on again. Tell everybody where they can hear more from you.
Wealthresearchgroup.com. Two things that might be of interest. One is a report we did about Taiwan and how World War III can start over that piece of land. So if that's of interest to you, go to wealthresearchgroup.com/Taiwan. And another one is about the frontier that the war is already happening between China and the United States. A region that if you control that region, you control the planet. So very interesting material, wealthresearchgroup.com/space.
All right. Well, everybody check that out. And thanks again, Lior. It was great speaking with you. We'll catch you again soon.
Thank you, sir.